Hello everyone. I wanted to make a video about the trades that we took yesterday and today, as well as covering the paper trading account just to see the progress and explain a little mistake that I just did today. I think I took a little loss for one tick. I opened a position in ES by mistake, so the damage isn't really significant, so it doesn't really matter in the overall scheme. It was just a little loss. And this account started with 1500 yesterday, the beginning of the year. So it is now at 1965 using just 3 micros. The idea is to show this and how playing with 3 micros is more than enough in a small account, especially when you're using a Top Step or Apex account or any of the other prop firms. So let's start with today's trades. So let's change the chart to MNQ. This was yesterday, this is today. Let's go down to a small time frame. And there's more logic behind it, including right before the FOMC minutes. ES did not take this low as well as a key level from a daily low at 4743.25. So at some point, I had taken a long here, I did not record it, but at some point when many things invalidated, we got a change in the state delivery. I saw a short opportunity, and that would mean if potentially ES were to go down, then NQ would follow as well to take out the low that it came from and before the FOMC minutes. So this was the FOMC minutes news release, took out this liquidity, price moved up, and then came back lower for my initial target, which I would have preferred if the FOMC minutes event took sell side and went as low as this, presented an opportunity for a long, I would have taken it. It would have been a decent low risk buy from there, but the idea was the bullish fair value gaps, a lot of the bullish PDR rates were not holding, and we now wanted to see price going to sell side liquidity. So if I turn this back to NQ, right, this was my target for this trade eventually with the runner, but it was a low probability just because yesterday's range day was so large, almost 400 points. Therefore, we can't expect a lot from today's range. And we typically look or see seek and destroy patterns when we get large range days. And what that means is that price is just consolidating, accumulating, right, orders to make its next move after a large move that has already happened. So in this case, let's go back to the MNQ chart and drill down to a smaller time frame, such as the 1 minute. Sorry about the microphone. So let's start marking up the chart a little bit more using this low first, as well as this low right here for NQ. And we'll just use the short position tool to mark the entry 72.25. Let's just call it even. The risk was the high. In the video, I was in the faster time-lapse video. You can see that I was just assessing to see if the position is forming or not. But that's the entry, right? 72. Stop loss would be the high. And the idea now is that an order block was formed. This little one right here, this green up close candle, the last candle that made the highest high. In the video, it's a blue line, right? My template is saved as bullish for blue, red for bearish. And so if that's the last up close candle, price closed below it, displaced below it, left an actual fair value gap in it, after it, I mean, a bearish fair value gap, red, and a couple of bullish ones in here, right? We'll change the colors to make them less busy. So the idea is that if this was a retracement and it was, I think, on the 15-minute or 5-minute that price failed to hold this displacement in price, that made it seem like, okay, they're rejecting, it's no longer even going back up at all. And let's actually take a look at that. Let's double check if it was 15. It was not the 15, but it was, the 15 was revisiting a bearish gap. The 5 was revisiting the bullish gap as well, right? Rejecting from it. I didn't have it marked in that video, but I was looking at it the whole time because I was long in an SPX specifically because I just wanted to have limited risk. And that's what made it seem like price is likely to reject from here, inverting the actual bullish fair value gap as well as respecting a bearish one. So I wanted to find a trade in that. Ooh, markets opened just now. So moving forward, I take a short on the retest of the order block that just formed, that signified the change in the state of delivery. So from there, I actually typed low probability trade just in case, and because it was that, it's at the end of the day, price made lots of swing movements up and down, seek and destroy conditions, that there was no guarantee that it was going to go lower. So I had one trim, I think about here. Let's see. Yep. And then another one at this low. And then the last one was near that liquidity pivot that I wanted to target. So based off of this, from here, this exit would have been a 1 to 1.5 risk to reward. Moving forward, this made it a 3 to 1 risk to reward for the second trim, and the last runner made about 170 ticks, or 42 points. I don't really count that risk reward. I count it from the initial risk, what the game plan was from the beginning, and that's what's valid. Anything extra is just runners, in my opinion. But the fact that the runner was able to get 170 ticks or so is phenomenal. So it's a blessing to have. So especially with micros, that's amazing. So right here, we also added in the video, was it here or was it this one? I did add this one. In the video, you'll see this being gray at first, waiting to see if it actually confirms, retesting it, and then at some point, I think I changed it to blue or red. I don't remember, to be honest. And the idea is that, let me remove some of these executions, that this would be a retest of this bearish fair value gap as well as the bullish inverted one as well, supporting price going lower, and we finally got the move down. So that's the review for that trade, and I'll stop this video here. I'll make separate ones for yesterday. And please let me know if you have questions in the comments.